Okay, right. So guys, a very good afternoon to all of you. We will then start the revision for financial accounting. Okay, so guys, just check and let me know whether my connection is clear for you all, guys. Am I audible? Is there any kind of lag or anything like that, guys? What you have? Or is everything okay? All good, right? Okay, super. Right, okay. Now, guys, this revision session, we have 4 classes in our hand, 3 hours each. So we will try to do the best, or we will try to make the best use out of it, right? Limited time, we'll try to get the maximum possible things done. Right now, guys, how these 4 sessions will work, we will work this way. We'll start off at sharp 6 every Monday. At 7:15, I will, guys, give you all a short break. 20 minutes time for anyone who wants to go and pray and come, right? 20 minutes time for that. And then we will continue the session, guys, until 9. So I will be covering all the major areas of your syllabus through the revision kit itself. Because as we know, the theory is different. The way that we apply it into the paper is the most important thing. We need to know how to handle questions. So today, guys, I'm going to start off with cash flow statement revision from section section C areas. Section B for your syllabus, section B areas. And then next Monday, we will touch on consolidation. Actually, I wanted to do consolidation today, but then I wanted to know how far that you all know from your theory. Okay. What are the areas? Once I get to know that from you all today, next Monday, we will touch on consolidation. I'll share some short notes, some double entries, everything for you to get ready so that next Monday, the consolidation session would be, what you can say, successful. So today, guys, what we will do is we are going to start off with cash flow statement lesson. So next Monday, we will then touch on consolidation. And last 2 weeks, we will touch on section A areas from the entire syllabus over there. Right. Okay. All okay. Right. Okay. So guys, then we'll start off with what you can say cash flow statement. So with these students, guys, who are now in class, just wanted to know, guys, when it comes to cash flow statement, you now know that for the exam, which is section B, you would definitely get what you can say indirect method. So you know, no, guys, in your paper, there are 2 areas, section A and section B. Section A, you will be tested on the entire syllabus, right? You will be getting 35 questions, and that 35 questions, guys, will come from the entire syllabus. Each question 2 marks. Then you have section B, where you have 2 questions, each 15 marks. So most likely 1 question would come from what we can say consolidation. The other question, we don't know from which area it will come. It can come from a financial statement, or it can come from a cash flow statement over there. And if it does come on a cash flow statement, then definitely the question is going to come from the indirect method only. Okay, so therefore, guys, first what we will do is we will do a quick recap on the cash flow statement indirect method theory, and then we'll quickly move on into the revision kit related questions. Okay. Now, guys, when it comes to the cash flow statement indirect method, on that. Okay, right. Now, guys, when you take the cash flow statement, what's a cash flow statement, guys, in the first place? A cash flow statement is basically our cash book. It shows all the cash inflows and outflows during a particular time period. But the difference between a cash book and a cash flow statement is that when you guys take a cash flow statement, it only shows summarized information. Okay, when you take a cash flow statement, it shows the most important cash inflows and outflows of a business organization. So when you take the cash flow statement, indirect method or direct method, it has 3 activities, right? So guys, what are the 3 activities normally does a cash flow statement will have, right? Activity number 1 is what we call operating activity. So this is the operating activity. We'll go down to this little bit deeper in a while. Okay. Then guys, after operating activities in our cash flow statement, we have something called investing activity. So usually guys, what does the investing activity include? Investing activity has all transactions which are connected to a non-current asset or an intangible asset. Okay, so any transaction related to non-current asset. So what do we mean by transactions related to non-current asset? That means buying property, plant and equipment, selling property, plant and equipment. Okay, and then on top of this one, even getting benefits out of them. What do you mean by getting benefits out of them? That means guys, for an example like this. Now let's say you have a building. Building is a non-current asset. Now from building, when you get benefit, example, rent income, rent received, then that will be considered as what you can say a investing activity. Okay, rent income or rent received. Then on the other hand, we have guys something called fixed deposits, or you make investments. Now normally guys, when you open a fixed deposit, or maybe when you go and make an investment, what's the benefit that you get? Interest received, dividends received, like that guys, we get benefits. So when you get benefits from non-current asset or intangible asset, example, rent received, interest received, and the other one is guys, dividends received, all these are also considered as what you can say a part of investing activities. Okay, right. Then guys, last one, we have guys something called financing activity. So normally guys, financing activity will include any transaction that's connected to raising money to the organization or raising finance. For an example, issuing shares, going for a right issue, obtaining a bank loan, settlement of bank loans, or even dividends paid, all are considered as part of financing activity. Okay, so guys, remember, financing activity will normally include these 5 things. So what are the 5 things? Once again, issuing shares, going for a right issue, obtaining a loan, settlement of a loan, as well as dividends paid. These 5 is what we consider to be a part of financing activity. So guys, remember, for you to get comfortable with a cash flow statement, very first thing that you need to know is the format. What comes under investing activity, what comes under financing activity. So quick recap, under investing activities, guys, what comes? Buying property, plant and equipment, selling property, plant and equipment, then purchasing intangible assets and getting benefits out of those. Rent received, interest received, investment income, right? Dividends received. Then on the other hand, financing activity will also have guys 5 things. What are the 5 things? Issuing shares, making a right issue, settlement of loan, obtaining a loan, as well as dividends paid. So these are the 5 things that you need to know. First of all, guys, you have to be very comfortable with the format. What comes under investing, what comes under financing. Right now, guys, that we know about investing and financing activities properly, let's quickly jump into operating activity. Now, this is where the student feels tough, right? The operating activity of an indirect method is where students don't understand with proper logic on why we take it or why we don't take it. Okay, so let me quickly give a recap on that part. Okay, so guys, it's like this. Right. Now, remember, our indirect method is our indirect method starts off with something called profit before tax. Okay, the indirect method always, guys, starting point is this profit before tax. Now, to arrive at profit before tax, the business has to prepare an income statement. Okay, from that's where now, guys, we get profit before tax. Profit before tax, we get it from the income statement. So therefore, guys, what we should do is that first of all, when you prepare an income statement, organization has to go through several topics. Revenue minus cost of sale is gross profit. Administration, distribution, investment income, and financing expenses. So like this, the business has to go through 6 headings in order to arrive at PBT. Now that's where the problem is. When you calculate profit before tax, we sometimes consider non-cash transaction. Now guys, you need to understand, in a cash flow statement, we can only show cash transactions. Only if money comes in or if money goes out, we can show. But when you arrive at profit before tax, we take all cash as well as non-cash transactions. So inside profit before tax, if you consider something as cash transaction, that's not a problem at all. Because guys, see, we are preparing a cash flow statement now. So inside the cash flow inside the profit before tax, if there is anything that's related to cash, you don't have to worry about that. Where you have to worry about is when it comes to profit before tax, when it comes to non-cash transaction. Inside the profit before tax, guys, if there are any non-cash transaction, then such transactions must be adjusted inside this topic called adjustments. Okay, so guys, just remember, quick recap. Adjustments, what will come inside adjustments? It's like this. If a transaction falls inside administration expense, distribution expense, investment income, and finance cost. If a transaction falls inside this topic, which does not involve cash, then such transactions only we are marking inside this area called, guys, adjustments. And guys, remember, inside adjustments, we normally do the opposite. Now, normally expenses we subtract, no. But inside the cash flow statement under adjustments, expenses are added. We reverse it. Likewise, normally incomes we add inside the income statement, no. But here in adjustments, we deduct the incomes. We have to reverse. So guys, again, quick recap. Inside adjustments, what and what will come? All non-cash transactions. So what should we do with the non-cash transaction? Do the opposite. Okay. So do the opposite means if it's an expense, you add it. If it's an income, you should deduct it. So guys, remember, when arriving at profit before tax, any problems with these 4 topics will be solved by doing adjustments. Then on the other hand, sales and cost of sales is there now, guys. Sales and cost of sale is something that's adjusted inside the working capital changes. So inside sales, if there are non-cash sale, that means if there is a credit sale, you don't have to worry about it. It will get adjusted inside working capital changes. Right? Then guys, over here in cost of sale, opening inventory and closing inventory will get adjusted over here. Whereas any credit purchases that we have will get adjusted inside trade payable. Okay. So these are things, guys, that we need to know before we start off a cash flow statement. What comes inside adjustments and what comes inside working capital changes. And guys, one more thing, just remember, how does working capital changes work? Usually, guys, it works like this. If it's a current asset, like inventory and trade receivable, if it is increasing, you should minus. If it is reducing, you should add. That's how the working capital changes work. Okay. Inventory and trade receivable, if they are increasing, that means money is going out. So minus. If it's reducing, that means money is coming in. So therefore, guys, it's plus. Trade payable, guys, will work in the opposite direction. Now, current assets work in one direction, no? So the current liability, or guys, the trade payable will work in another one direction. Right. And guys, one more thing that you should know is for your exam, the format will be given. Okay. Now, in the ACCA, this knowledge level exam for cash flow statement, examiner has made it as easy as possible. He will tell you exactly what you need to search. Now, normally, guys, in our advanced level, when it comes to adjustments, we know should write these transactions. But in your exam, it's not like that. They will tell you what comes in adjustments. They will type all these and give it to you. So you just have to search it. That's it. Got it? Even under investing activity, financing activity, examiner will tell you what's coming. Your duty is just to search the transaction. So guys, you just need to know the theory part. Okay. In adjustments, what do we do? Expenses we add, incomes we deduct. Inside working capital changes, what we do? If current assets are increasing, minus. If it's reducing, plus. I'll share all these, notes, whatever that I have, short notes, everything. I can share it to with the institute's permission. I can share it to the group. Right. Then, guys, on the other hand, you just need to know investing and financing activity. So if you know the theory, guys, cash flow statement indirect method is so easy in the ACCA exams because the format is given to you. You just need to what? Copy paste. You just need to find the number and just write it in the format. I'll show you exactly how your exam will be. Then based on that, we can guys start a question. Wait, I'll quickly load the exam kit and show you how this is done. Okay. So guys, this is how your exam paper will be for the cash flow statement. Right. Here you go, guys. Can you see? Right. So not like advanced level. See, the entire format will appear on your screen when you do the cash flow statement. Okay. So you don't need to worry about what comes under adjustments, what comes under operations, what comes under investing, what comes under financing. None of this, guys, is relevant. The only thing that you should be worried about is the pluses and the minuses and how to get this answer. That's what you will have to focus on your exam. All these will be typed and given to you. It will appear on the screen. Only thing you have to search. Okay, depreciation, let's type it. Loss on sale of equipment, let's type it. Only that part, guys, you should do from your end when it comes to the examination, right? Apart from that, all the others, you will be easily able to, find it out. So this is how the exam structure is going to be. Right. Can you guys little bit check and see so far with what I have said? Are you okay? If so, we can start doing these exam kit questions. Then you would understand much better and clarify your doubts. Just check and see, guys, anything that was unclear that was said so far. Just check and let me know. We can work on them. Or if everything is good, we can start doing the question. Okay, right. So guys, so far seems like there is no doubt. So in that case, just give me a few minutes time. I'll quickly set up the format on my laptop and then we can start doing this question. Also, just give me a minute. I'll quickly plug this to the charger. Done. Okay, right. So guys, I think we are ready to start the question. So this is guys from the exam kit itself, right? So this is how the standard of the question will be. It won't be difficult than this, or it won't be guys easier than this. Okay, right. So look at this question, guys, over here. They are telling, right? Using the following information that is available, complete the statement of cash flow statement. So then they have given you the cash flow statement. So if you guys have a look at your question over here, like I showed you earlier, you have the full cash flow statement in direct method. Also guys, yeah, so that's pretty much it what they have given over here. Okay, now guys, first of all, in your exam, on your own, you have to decide which T accounts or which workings that you're going to do. Now, they will not tell in the exam, you have to do this account, that account to find the answer. You should identify it on your own, which and which account you're going to prepare. So that one, guys, we should decide by reading the adjustments. Right now, guys, let's have a look at this adjustment, what we have over here. Right now, here, guys, they are telling, during the year, Firework disposed several items of plant and equipment. See, guys, they sold an asset. So normally, guys, in accounting, when someone sells an asset, what is the account that we prepare? Disposal. That means, guys, in your working sheet, right, you need to have a disposal account ready in order to find the answer. Now, once again, guys, preparing all these accounts are not compulsory. Now there are some students without preparing T account, they use formulas and get the answer. I really don't mind. Okay, it's just that T accounts are much safer in my opinion. So over here, guys, because they are having selling an asset, we are preparing a disposal account. Okay. So because now normally, guys, when you sell an asset, you have to eliminate the value of it. No? So because of that one, guys, I'm drawing the PPE account also. And I want you to guys understand this thing very carefully. In our exam, the PPE account will always be at carrying value. Now that's important. Okay. In our exam, the PPE account will always be at carrying value. Now what's the big deal about that? Now usually guys, we are always used to preparing PPE at cost. So when the PPE is at carrying value, what you need to do is you need to learn two things. You need to keep in mind two things. Number one, any depreciation is credited inside my PPE account. That's the first thing that you should remember. Okay. When the PPE is at carrying value, guys, first thing what you should remember is that all depreciation is credited to my PPE account. Here, guys, all depreciation will be credited to the PPE. Because, guys, normally, what's the double entry, guys, for depreciation? Normally, double entry for depreciation is what? Depreciation account debit and provision for depreciation account credit. Correct or wrong? But then what happens? When the PPE account is at carrying value, the organization does not maintain a provision account. So because they are not maintaining a provision account, we can't go and credit there. No. So therefore, guys, what we do, we go and credit it inside our PPE account. Simple as that. That's the first thing that we need to do. Okay. So guys, remember, if the PPE is at carrying value, what's the first thing that you should strike to your mind is that all depreciations are credited inside my PPE account. That's the first thing. Right. Second thing, guys, what you should be worried about or be concerned about is that disposal. Right. Now, guys, normally during a disposal, what's the first step? Normally, when we dispose, step number 1, we remove the cost of the asset. What is step number 2, guys? Step number 2 is we eliminate the provision for the asset. In carrying value, what we do is that, guys, we don't remove cost separately, provision separately. That we don't do. Instead of eliminating cost and provision separately, we eliminate the carrying value of the asset. Because, guys, understand, when you remove cost and when you remove provision, cost minus provision is anyway carrying value, no? So rather than doing cost and provision separately, what we do here is, guys, we eliminate the carrying value at once. Here, during disposal, step number 1 will be eliminate the carrying value of the asset. So these are two things that you should learn when you start PPE at carrying value. Apart from that one, guys, the PPE account is same. The only 2 points where you should be concerned if it's at carrying value is that these 2 things what we spoke about. So guys, what are 2 things once again? If the PPE is at carrying value, step number 1, any depreciation will be credited inside the PPE account. Got it? And during a disposal, step number 1 will be not remove the cost, not remove the provision. That will get replaced. Step number 1 will be remove the carrying value. So these are, guys, 2 things that you need to be concerned about when you start doing disposal and PPE at carrying value. Right. Okay. Then, guys, let's go down to the next part. Okay. Just spare me a minute. Okay. Right. So, guys, next thing. Right, let's move on to the next adjustment. Right, then, guys, over here, Firework estimated that the income tax liability. Now, guys, can you see income tax? Because they are speaking about income tax, what I went and did was I went and prepared my income tax account as well. Okay, so here you can see this one, guys, and this, because the first paragraph said disposal. So because of disposal, I prepared PPE also. And then on the other hand, over here, guys, because they are talking about income tax, I went and prepared my income tax account also. Right. So that's it, guys. Only 2 adjustments we have. Now over here, retained earnings. Why did I prepare that? Okay. That one, guys, depends on the paper. You go through your format and see, is there something called dividends paid? Now the examiner, when he shared the format on the screen, there was something called dividends paid. Normally, guys, to find the dividends paid, we open retained earnings account. So this is the reason why the retained earning account is drawn on my screen over here. Are you guys clear with that part? So this is how you need to decide which account to do and not do in your exam. Go through the adjustments and see. So I can tell you guys one thing. So far, when I have looked at all the past paper or all the paper related questions, definitely these 3 they ask in the exam: disposal, PPE, and income tax. Retained earnings, it depends on the paper. How do we decide whether to draw or not? Look at this one, dividends. If dividends is there, draw and find the answer. If this is not there, you don't have to open the account. So this is how, guys, we decide in our exam which working to do and not to do. Right. Can you guys little bit check and see with the T accounts part? Are you clear? And also guys, on this one, the 2 points that I spoke of, depreciation is credited to this account, and we don't remove cost and provision separately, where we remove what carrying value at one go. Carrying value is eliminated. A little bit check and see guys, any doubts that you have. If so, you can tell, and then we can start doing the question. Okay, so guys, so far no doubts. Right, super. Okay, then guys, let's move on, or then we can start doing the question over here. Okay, so guys, look at this part. Right, number one, during the year ended 30th of June 2005, Firework Corporation disposed several items of plant and equipment for a sales proceeds of 8 million. Okay, now guys, what happened here? They disposed and they got 8 million cash. Sales proceeds means what we got. So usually guys, when you sell and get the asset, we are supposed to mark that inside the disposal account. Okay, so what happens when you sell, money comes in, cash debit, disposal account will become credit. So I will guys type it over here, cash, which is going to be 8,000 rupees. Done. Okay, so we sold it for 8 million. So normally guys, when you sell and collect money guys, that will be part of step number 3, no? Okay, so step number 3, then what has to happen? We need to mark this inside our cash account. I mean, on the disposal account on the credit side. Money comes in, cash debit, disposal account, credit. Okay, then guys, next part. The loss on disposal is 2 million, which is included within cost of sale. Okay, that's not a big problem, but just remember loss on disposal. So guys, remember loss on disposal is supposed to be marked on the credit side of the disposal account, because normally loss is an expense, no? So expense means income statement debit, our disposal account will become credit. So loss on disposal, guys, let me mark it over here, 2 million. Done. Okay, right. Then let's check and see what else the adjustment has given to me. Depreciation is 15 million. So this is what guys I spoke to you a few minutes ago. Any depreciation must be credited to the PPE account. Okay, so what's the double entry guys for that one? Depreciation account debit, property, plant and equipment will become credit. That's a double entry. Okay, so let me quickly mark that one over here. Depreciation is how much guys? They have shown depreciation to be 15 million rupees, right? Depreciation. Done. Okay. So this is how guys you're supposed to mark the first 3 numbers what they have given inside the T account or inside the adjustment. So guys, what was the first one? They said we sold something and we got money. So therefore cash account becomes debit and disposal account becomes credit. That's the first thing. Second thing guys, loss. Loss is normally an expense. So because it is an expense, what will happen? Income statement debit, our T account will become credit guys over here, income statement. Last one, depreciation. So remember guys, any depreciation, if it's at carrying value, should be credited to our T account. So this is what guys we have to do so far from the adjustments. Right now guys, what I have marked inside my T account, plus guys over here. Now I just realized that some of you may not have this revision kit. So what you do is guys, in that case, you observe how I'm doing the question. And once I'm done, I will share my work with you all in the group. So then later you can, try this and see on your own, because I haven't given you time to draw the format. Okay. So therefore guys, you just observe what I'm doing or how I'm doing. Any doubts that you have, you can ask me. And then after the class, I'll share my materials. I'll share my worksheet. So you can just go through it one more time and see. Okay, right. So guys, anyway, can you guys little bit check and see guys with the 3 numbers that I have marked so far, the 8 million, the 2 million and the 15 million inside my T accounts. Are you clear with that part? Any doubts that you're having so far? Little bit check and see guys. Okay. So seems like guys, you all are okay with that. So no doubts. Okay, next one. Firework estimated that the income tax liability will be 6.5 million. Okay, now guys, don't go to worry about this 6.5 million. We will anyway come across this. But if I am to, like give you all an assurance of what they are talking over here guys, this part. See, don't worry about this one. We'll anyway sort it out. See guys, this 6.5 million only guys, the one that is coming over here. Right? So this one, eventually I will come across this. So therefore, I'm not going to be much worried about this 6.5 million. It's there on my SOFP. So don't worry about this part. Okay, guys, now look at these numbers, what we took just now. See whether we can use it somewhere. Okay, now guys, look at this one, will you? Right, what is this one, guys? Cash. This is the disposal proceed. Guys, remember when you sell an asset and when you get money, it's part of investing activity. Okay, and now guys, one more thing. Now, can you see here in the format, there are some things that you should delete. Okay, now here, look at this one, guys, for an example. Let's go through this quickly. Now, this is what the examiner has given me. Now, there are occasions where you have to select. Okay, there are guys occasions where you have to select the correct word. So when you go to select the correct word, you delete which does not apply. That's what the examiner says. Here guys, can you see? Note, delete which does not apply. Now in my format guys, here he has given me two options. Profit before tax, profit after tax. Normally guys, cash flow statement with what do we start? We start with profit after tax. Sorry, profit before tax. So therefore guys, what we do, we delete this word over here after tax and only keep profit before tax. Right, let's see guys, any other options like that they have given. Let's see. Here, cash flow from financing / investing activity. Now guys, normally what's the second heading? Second heading is normally investing activity. Exactly. So therefore guys, let's remove the word financing activity. Okay. Right. Then guys, let's go to the next one. Cash flow from financing / investing activity. Now guys, normally third one is which activity guys? Normally third one is financing activity. Then let's remove the word investing activity. So like this guys, in your exam, there are sentences where examiner gives you all two words, delete the wrong one. Okay. And only keep the correct one over there on the screen. Right. Okay. Let's this one guys over here. Coming back to what we were discussing. Cash. Disposal cash means what guys? It's part of which activity? It's part of investing activity. Here guys, can you see? Disposal proceeds of plant and equipment. Take the 8 million and you will copy it in your exam in your format over here. Right? When you sell an asset, it's part of what activity guys? Investing activity. Yeah, right. I will show you the marking scheme over there on how the marks are allocated for this part. I will show you that one. Right. So usually for these workings, they don't request these workings. These we do for our sake. But over here in your paper, there will be an area where they have shown the mark allocation. I will show you that one as well. Okay, then guys, next one, this one, IS, income statement. What is this one, guys? This is what? This 2000 is loss on disposal. That the paper said, no, guys, can you guys remember over here? They said, where? Here, the loss on disposal. So guys, remember, loss on disposal is an expense, no? So expense means it will come inside adjustments. Here, can you see? Loss on sale of plant and equipment. So what you do, guys, you take this 2 million and you will type it here. Right? 2 million. Done. We will type it over here. Finished. Okay. Wait, guys, I think I added an extra column without knowing it. Okay. So guys, over here, disposal was 8 million. And also guys, one more thing, when you type a number, select this also. The examiner will always ask whether to add or whether to subtract. Okay. So therefore guys, what you do, you always do that part also. So guys, remember from this point onwards, your focus has to be whether money is coming in or going out. Okay. From this part over here onwards, your focus has to be whether cash is coming in or cash is going out. Okay. Here, under adjustments, your focus has to be the opposite. expenses means adding, income means deducting. That has to be the focus. But from inventory onwards, your focus has to be whether money is coming in or whether money is going out. Right now, guys, over here, disposal. Disposal means selling, no? So when you sell, what happens? Money comes in. So therefore, guys, you have to keep the word add and remove the option subtract over there on the screen. Simple. Right, loss on disposal. So guys, remember loss on disposal here, can you see, comes under adjustments. Write this. Okay. Now, guys, loss is an expense, no? Normally expenses, what do? We deduct. But in the cash flow statement under adjustments, expenses are done opposite. We reverse it. So therefore, guys, what we do? We add expense normally deducted. But under the cash flow statement adjustments, guys, we have to reverse it. So therefore, guys, what we will do? I will remove the word subtract. Okay, next one, guys, over here, this number, depreciation. Guys, remember depreciation is an expense. So therefore, it should come inside what topic here? Adjustment. Same story. Depreciation, guys, is an expense. Because it's an expense, we will write it here. And since it's an expense, we are going to do the opposite. We are going to add. So therefore, guys, let's delete the word subtract over there. So this is how, guys, you are going to mark the first three numbers. So first, what you do, guys, in the exam, from the adjustments, you copy it first here. Okay. First, you copy it inside the T account. Then you run through the format and see line by line. It's like this, guys. If you learn the format, you don't have to waste time. But if you don't know the format, you go through line by line and see where can I copy this. So this is disposal. So I wrote it here. Loss on disposal, wrote it here. Depreciation, I wrote it here. And I did my adjustment. So here expenses were added. Here, because it's a cash inflow, we have gone and added this. Right, little bit check and see, guys, until this part. Are you okay with what I have done so far? Any doubts that you have, guys? Okay. So guys, you are comfortable with what I have marked so far? Okay, super. Okay. So guys, any doubts that you have, just let me know. Okay. Right. Now, guys, that the adjustments are now sorted. Okay. Now what we are going to do is, guys, we are going to go now from the question paper line by line. Okay. So let's just check that and see, guys, over there line by line. Okay. Now, guys, let's start then this one. First one. Okay. Revenue and cost of sales. Okay, guys, remember revenue and cost of sales, we do not consider for indirect method. Because, guys, revenue and cost of sale is something that we adjust inside our working capital changes. So because of that particular reason, revenue and cost of sales, you never have to worry about when you do an indirect method. Because revenue and cost of sales is adjusted inside this working capital changes. Right, next one, guys, gross profit. So if revenue and cost of sale, guys, if we don't consider, no need to consider the gross profit also. Right, next one, guys, we have distribution and administration expenses. Normally, guys, distribution and administration expense also we don't consider when we do the indirect method, to be very honest. Okay. So therefore, you don't have to worry about this part also. And also, guys, on the other hand, you check whether you need to take this. Now, see, distribution administration expense, if you're taking, you should take it to adjustments. Here, go through and see, have they given space for that? No, guys. So therefore, you don't have to worry about it. Okay, right. Interest. Now, guys, remember, interest is something that will come inside adjustments. Can you see? Yes, see, interest, they have given here in adjustments also interest. So because they have given, you should copy it over here, right? Let's start marking that one, guys. Interest is 750. Let's copy this one over here, 750. Now you must be thinking, why is interest taken inside this? Okay, guys, listen. Interest, we are specifically marking it over here because interest should be again shown over here. Okay. Now it's like this one, guys. Interest was subtracted when arriving at PBT. Do you understand that part? When getting profit before tax, interest was deducted. Now we are going to reverse it. Why we are going to reverse it is because interest is not supposed to be deducted from here. Interest should be separately shown under cash generated from operation. That's the reason why interest we are showing it again. And you must be thinking, okay, interest we are marking here. So guys, interest is an expense. No? So all expenses, what do we do inside adjustments? Opposite, we have to add. So therefore, guys, I'll take this over here. Interest, I'll delete the word subtract. Only will keep the word add. And this same interest, again, you have to show down. Okay. Now, to be very honest, it doesn't make an impact. Here you're adding, here you're subtracting. It's not going to make an impact. But still, we have to, guys, show this in the exam because examiner has given it on the format. And on top of that one, interest we are reversing from here because interest doesn't belong here. Interest should be separately shown. Because of that particular reason, interest, we always mark it twice. First, we reverse it from adjustments because it doesn't belong there. We separately show it inside cash generated from operation. So guys, this interest, because it's given under adjustments, I have typed it here because it's an expense I am adding. Can you see the word? Again, it's repeated over here, guys, interest paid. So therefore, what you do, take 750, show it over here. Now here, guys, you have to be careful. This is interest what? This is interest paid. Because it's interest paid, what we are going to do, we are going to show it as a subtract. Why? Paid means money goes out, no? So guys, when money goes out, what happens? We have to mark it as a negative value and show. That's why we are showing over here subtract. Do you guys understand why we take interest 2 times? Here I take interest because reason number 1, it's given in my format. And reason number 2, interest is not supposed to be deducted directly from this. You have to separately show that inside here. Cash generated from operation. That's why we are reversing interest and again marking it over here and show. To be honest, yes, no impact, but we have to do it and show that way. Okay, then guys, let's go to the next part. Profit before tax 31,000. Profit before tax is the starting point, guys, of the cash flow statement. So let me mark it over here, 31,000. Done. Okay, then guys, next part. Income tax expense. Guys, remember income tax expense. Can you guys remember that we were doing an income tax account? So that income tax expense part, we have to mark it over here and show in our account. Okay, so let's start with that one then. Okay, let's do this one. Income tax, guys, is an expense. So for those who don't know, if it's an expense, inside the income statement, it's what side? Debit. Okay, if it's an expense, inside the income statement, it's debit. Therefore, in your tax account, this is going to be credit. Income statement 6,000. Are you guys okay with that part? So guys, remember, income tax expense. Here it's an expense, no? So it's debit. Therefore, in my T account, I should mark this on the credit side and show opposite side. Okay. Then guys, next one. Other comprehensive income, we have, guys, revaluation of property, plant and equipment. Okay. Now guys, see, when you go through the format, for revaluation of property, plant and equipment, there is no space. Here, can you see? When you go through the entire format, revaluation, guys, normally we don't show it on the cash flow statement. Why? Because it's a non-cash item. When you revalue, no one gives you money. So therefore, guys, since it's a non-cash item, we are not showing it on the cash flow statement. So why they have given this revaluation of property is supposed to be considered when you do the PPE account. Because guys, we are revaluing property, no? And you should understand in FA syllabus, we only have revaluation gain, no loss. Okay. In our syllabus, we have no revaluation losses. We only have revaluation gain. So guys, remember any revaluation gain, you should mark it in the property account and show revaluation. How much is the revaluation? 2000. Done. Okay, now guys, again, for those who don't know, how does the PPE account work? Normally, guys, PPE, if something is increasing the value of PPE, debit side. If something is reducing the value of PPE, it will come on the credit side. Is that clear? If something is increasing the PPE, it will come on debit side. If something is reducing the value of PPE, it will come on the credit side. This is how the revaluation works. Sorry, PPE account works. Increasing this side, reducing this side. So this is a revaluation gain. So revaluation gain means PPE increases. That's why, guys, we are marking it over here on the debit side. Got it, guys? Okay, next one. Yeah, and also, guys, I almost missed something. This one, profit for the year. Normally, guys, remember profit for the year, we should take it to the retained earnings account. Now, usually, profit after tax or profit for the year, we don't consider when we do the cash flow statement. But in our cash flow statement, there is a dividends paid, no? To find the dividends paid, we have to open the retained earning account, no? Because of that reason, I need my profit for the year or profit after tax. So guys, remember, normally profit after tax is found on the credit side of the retained earning account. Okay, so because of that reason only, I am marking this. If there was no dividends, I don't need this account, no? Then I don't need profit for the year or profit after tax. I only needed it because I needed my dividends. That's all, guys. Okay, right. So then, guys, on the other hand, over here, all these transactions now I have considered. So guys, again, quick recap from the income statement, what I did. Revenue, cost of sale, gross profit, distribution, administration, we don't take it at all because distribution administration is not given here. Revenue and cost of sale is adjusted inside working capital changes. Interest, we wrote it under adjustments, plus we wrote it over here. Profit before tax, we copied it at the start. Income tax expense, we copied it to our T account. Then, guys, on the other hand, profit for the year, we took it to the retained earning account. Revaluation, we are not marking on the cash flow statement, but we are marking it over here in the PPE account. So this is how we need to mark the first few numbers from the income statement. So guys, this is how you have to always approach cash flow statement. You have to go line by line. You can't, pick numbers from here and there. Have a proper order so that you don't miss things. Right? Can you guys little bit check and see from the income statement, are you clear with how I took the numbers? Here, guys, let me show you the marking. Let me show you my worksheet. Little bit check and see, guys, are you comfortable with why I took things? Why I didn't take things, everything? Can a little bit check and let me know, guys, if you have a doubt. Right. Okay. So guys, so far everything is okay. Right. Then guys, let's move to the next page, which is the SOFP. Right. Okay. Now guys, let's learn quickly then how to do the SOFP part. Right. PPE. Guys, now can you remember we were doing something called the PPE account? So because we are doing the PPE account, we need to mark now our answers over here. So guys, I'll go to a one-page view. Okay. Let's start then. So because we have a PPE account, guys, we should mark it over here. So guys, remember, you already know this. These are balances. So you have to guys look at the dates very carefully in the exam. Don't mess up the dates. So this is 2004. So this is my brought forward, and 2005, this is my carried down. So guys, PPE, remember PPE is what? Asset. So normally guys, if it's an asset, brought forward will be on debit side, while the carried down will go to the credit side, 110,000. Like this, you have to guys mark it and show. Right? PPE brought forward asset, debit, carried down is credit. Right, inventory. Okay, now guys, remember, inventory is part of working capital changes. Okay, what do you mean working capital changes here, guys? Over here, we have to do this part here. The moment you get inventory, do all three at once. Inventory, trade receivable, and trade payable. Here, guys, can you see? Normally, working capital is three components, no? Inventory, trade receivable, trade payable. So, guys, you do all three at once. Now, if you're thinking how to do this working capital changes, it's like this. Guys, now see, start like this. Compare brought forward to carry it down. Don't do the other side. Okay, you have to always go brought forward, carry it down. What's the difference? Now see, inventory 30 to 36, 6,000 difference. Now you should also decide whether it's increasing or reducing. So guys, 30 to 36, it has gone up, no? So increase. Okay, this increased. Okay, then guys, on the other hand, what happened? Here, guys, this one, trade payable, do this also at once. Okay, right. 30 to 36,500. This also has increased by 6,500. So like this, guys, you should quickly decide what happened. Find the difference, see whether increasing or decreasing. Okay, next one, guys, quick recap. Remember, if current assets are increasing, that means money is going out. Why? Guys, inventory increases. Inventory increasing means why? Because we bought. You understood? Inventory increase means logical reason you're buying. So when you buy, what happens? Money goes out. That's it. Trade receivables are increasing. So trade receivables are increasing, guys. What does that mean? That means they have borrowed money from you. So for you, money goes out. That's why we say when the current assets are increasing, meaning money goes out. So therefore, guys, both are increasing. So I'll write it over here in my format. Inventory 6,000, money goes out. So therefore, I should delete the word add. Receivables also, guys, what's happening? Increasing. Increasing means again, money goes out. So I'll delete the word add once again. Okay, all good, guys, so far? Right, next one, trade payable. Guys, remember, trade payable works in the opposite direction. It works in the opposite direction means, now current asset increasing means money going out, no? Trade payable increasing means money is coming in. Why? Guys, trade payable increasing means we have taken money from them. Our liability increasing, no? So we have taken money from them. So when you take money from them, what happens? Cash comes in. So therefore, guys, that's a positive 6,500. This is how we do, guys, working capital changes. So money comes in. So let me delete the word add in my format. Just check and see, guys, are you clear with how to do working capital changes hereafter? First, go brought forward to carry it down. Check the difference. Mark it and keep somewhere. Then see whether increasing or decreasing. Then decide whether money is coming in or going out. Simple as that. Right, little bit check and see, guys. Are you okay with this part? Any doubts that you have from the working capital changes? Okay, so guys, if you are having a doubt, just send a message in the chat box. Okay, so I will be happy to help you and clarify that. Okay, now guys, let's go to the next part then. Okay, cash and cash equivalent. Okay, guys, understand. Cash and cash equivalent is always the last part of our format. Okay, usually the word cash and cash equivalent is given at the bottom part of the format. No, so then, guys, you have to focus on that one. Right now, see, cash and cash equivalent in 2004 is 10,000. So I'll write that here. Now 2004 is brought forward. Then it has to be start. So start cash flow 10,000. Okay, then guys, they are telling cash and cash equivalent in 2005 is nil. Okay, what does that mean? If it's nil, check and see, is there an overdraft? That's the indication. Okay, normally guys, if cash is nil, check and see the same time, is there an overdraft? Let's see. Here guys, can you see bank overdraft 2000? These in 2005. That means that's at the end. So that means guys, you started the year with money, but when you are finishing off, it became a bank overdraft. So guys, again, exam technique or exam tip, if it's nil, make sure to check current liabilities to see, because most of the time, guys, there is an overdraft. So if there is an overdraft, you should mark it and show as a negative answer. Okay, right. Then guys, let's go to the next part. Then, right. Now guys, we have over here equity share. Okay, now guys, listen to this part carefully. In FA exams, when you take equity and compare, please compare it with the premium together. Now, first thing guys, remember in the FA syllabus, share capital can only increase. It will never reduce. So if it is increasing, then it means that we have issued shares. Understood? In FA syllabus, shares can only increase. If it increases, then it means that we have issued shares. And remember guys, in FA, when you compare it with premium, because most of the time we issue shares at premium. That means 5 rupees share, we give it for 7 rupees. We charge a little bit extra. So therefore, when you do compare it together. Now guys, see shares here to here, what's the increase? 5,000. Here to here, what's the increase? 5,000. That means total increase 10,000. Here guys, can you see? When you issue shares, it's a financing activity. Here can you see? Proceeds of share issue. It's a financing activity. So mark it here 10,000. Guys, how it became 10,000 once again? Share capital 5,000, share premium 5,000. You have to always do it together. Okay. And remember, when you issue share, money comes in. So because money comes in, I'm going to delete the word subtract over here. Done. That's it. Okay, next one, guys. Revaluation. Guys, don't worry. 8,000 or 10,000, what's the change? 2,000. No, that 2,000, guys, we have already considered. Here, can you see? Revaluation 2,000. So don't worry about it. Okay, then guys, next part. Retained earning. Okay, guys, can you remember we were doing a retained earning account? So you have to mark this and show. Brought forward, carried down. Okay, so brought forward, guys, will become 85,000. And the carried down, guys, will become none other than 96,000. Now, if anyone is thinking, why brought forward this side, carried down this side? Okay, guys, remember, retained earning is an equity. Okay, retained earning is an equity. So because it's an equity, brought forward is credit side, carried down is debit side. So if you still don't know, learn it now. Assets, brought forward debit, carried down credit. Equity and liability, other side, brought forward credit, carried down will become debit. Okay, now guys, next part. Bank loan. Okay, now guys, look at this one carefully. Here to here. Okay, now guys, remember, bank loan, two things can happen. Either you take a loan or you repay it. Bank loan, debentures, same. Either you take it or you return it. Now guys, look at this bank loan. What happened? 17,000 to 7,000. What happened? 10,000 reduced. No, can you see? 17 became 7. Then 10,000 dropped. So guys, remember, when the bank loan is reducing, that means we have paid the bank loan. Money goes out. If the bank loan increases, then we have taken a loan, obtain a bank loan, money comes in. But if you have reduced, that means if you have settled. Settle means money goes up. Here guys, can you see over here in the format? Repayment of bank loan. So bank loan, write it here. What's the difference guys between the two? 10,000. So if you repay, what happens? Cash goes out. So it's a deduction. So I'll delete the word add. Okay, next one guys. Trade payable, we are already done with that. No, here can you see change in trade payable done. Next one, guys, we have bank overdraft. Okay, so bank overdraft was a finish. Income tax, guys, can you remember we were doing an income tax account? So you have to mark it there. So what is this? Two numbers. One is 2004, then brought forward. Other one is 2005, then carried down. So let's mark this one, guys, over here. Brought forward. How much is the brought forward? 10,000. And guys, over here 6,500. Then that will become carried down. Done. Okay. So this is how, guys, you do a cash flow statement. Still not finished, but you have to go, guys, line by line on everything. Everything you have to ask yourself, should I take it or not? Sometimes we take it to the foreman directly. Sometimes we take it to our T accounts over there. Right. Okay. Now, guys, it's time for us to close our accounts quickly. Okay. And then it's time to see whether we need to balance it. I'll show you, guys, in the exam, whether should we balance it or not. Okay. Right. So, guys, first thing what we will do, let's close the account. Okay. Disposal account. Let's close it, guys. 8,000 plus 2,000, 10,000. 10,000, you bring it to this side. Because there is nothing over here, 10,000. Okay, now what is this 10,000? This is what we call PPE carrying value. Okay, guys, can you remember when I started the class, I said you something important? During disposal, step number 1 is eliminate the carrying value of the asset. Now, normally in our A level and all, we used to do remove the cost, remove the provision, not like that. When it comes to PPE carrying value, we don't remove cost and provision separately. We remove what? The carrying value. So therefore, guys, this 10,000 is the carrying value of the asset. Now you should do the double entry, remove it. So what did we write here? PPE. So therefore, guys, PPE account will become credit disposal. Did you guys understand that part? Once again, I closed the account and got 10,000. Now, usually, guys, we do 10,000, we write it as PPE cost, no, but here it's not the PPE cost, PPE at carrying value. So because I'm selling, I should remove this from my system now. So when I eliminate, what will happen? PPE will become credit, disposal will become debit. So it's not the cost, it's the carrying value. So what's a double entry? PPE credit, that's why I wrote it here, disposal account debit. Done. Okay. Now, guys, then can you close the property, plant and equipment account and check and see, guys, there is going to be a missing answer over here. Right, close the account. 110 plus 10, 120, 120 plus 15, 135,000. Right, bring the answer, guys, over here. 135,000 minus these two, guys. Okay, check and see then what's going to be the answer. 135,000 minus 93,000. Minus 2. So therefore, guys, what's the answer? 40,000. Okay, guys, listen. If the answer comes on this side, we call that as purchase of PPE. Is that clear? Remember, guys, if the answer comes on this side, there is only one logical answer. That's what we call, guys, purchase of PPE. Right. So, guys, keep this answer in your hand. We'll need it later. Income tax. Close the income tax account, guys, quickly. 10 plus 6, answer is 16,000. Bring 16,000 onto this side. 16,000 minus 6,500, guys, answer is 9,500. This is the cash. What do you mean cash? Income tax paid. Okay, this is the answer, guys, for that one. This is the income tax paid. Okay. Right. Then, guys, last one, retained earnings. Now close this also, guys. 85 plus 25, what will be the answer? 110,000. Bring 110,000, guys, over here. So 110,000, guys, minus 96,000, what will be the answer? I think it's 14,000. Let me check on that. 110 minus 96. Yeah, 14,000, guys, is the answer. So what is this answer called, guys? Dividends paid. Okay. Guys, remember when you pay or in the retained earning account, the debit side answer is what we call dividends paid. Okay. Now, guys, see these answers, what we found. Okay. Now, I found this and I put it over here. Then I found this. then I found this, and I found this. Okay, now guys, let's start marking that. First one, this one guys over here. Which one? Yeah, this 40,000. Here guys, can you see? Property, plant and equipment purchase is 40. So when you buy PPE, it's part of investing activities. Here can you see? Cash purchase of property, plant and equipment. So this 10, no need to worry. That only goes here. This 40,000 is purchase of PPE. So because you're buying, money goes out. So therefore, guys, it's a negative answer. Let's subtract. Done. Okay. Right. Income tax cash. Income tax cash means you're paying, money goes out. That one guys over here. Here can you see income taxes paid. So when you pay, money goes out. So guys, mark it, deduct the word add or remove the word add. Last one guys, dividends paid. Dividends paid guys comes over here. So therefore guys, this comes here. So guys, remember when you pay, once again, money goes out. So because money goes out, answer, we have to remove the word add. Okay, so like that, guys, you have to make sure that there is only one option over here. Right, guys, one more thing, if you are not aware about it, cash flow statements, you don't have to total it up. Now, during our A-levels and all, we used to total up and now get the answer like that. You don't have to do it, guys, for the advanced level. Sorry, you don't have to do it for FA exams. See, guys, over here, see, cash generated from operation. This totaling, no need to do, not applicable. Investing activity, last answer, NA, not applicable. Financing activity, last answer, not needed, not applicable. Guys, but guys, remember, they will ask you to find this answer in the exam. Okay. Normally, guys, what they do is they will ask you to find this answer in the exam. Now, how to find this one? It's like this. Okay. Usually, this answer plus this answer should give you this. All of you know that part, no, guys, right? Wherever you covered theory, right, for ACCA FA, they would have taught you this answer plus this answer is equal to 2000. So always examiner will ask you to go backwards. That means, guys, in your calculator, you type over here, okay, minus 2000. When you go, guys, backwards, you have to, guys, do the opposite. Now, this is plus 10,000. So, guys, when you go backwards, what will happen? Minus 10,000. So, therefore, guys, minus 2 and minus 10, what will be the answer? Minus 2 and minus 10, answer will be minus 12,000. Because it's a minus answer, right? You have to delete the word increase. So, because it's a minus, it's a decrease in cash and cash equivalent. So, guys, remember, operating activity, investing activity, financing activity, they won't ask you to do it in the exam. What they will ask is this last answer. So for that, you have to go backwards. Take the cash at the end, take the cash at the beginning and do the opposite. Now in my paper, cash at the beginning is plus. No? So when I went backwards, I had to subtract. So because, guys, I subtracted over there, it became minus 12,000. So this is how, guys, we do a cash flow statement in our exam. Format is given. You have to do your workings, transfer your answers, and, remove the unnecessary words from the format. Right? Can you guys little bit check and see with the T accounts and with this last part? Any doubts that you have, guys, that you want me to clarify? Yeah, sure. I'll explain that part. You want me to explain how I got the 12,000 or that minus 2,000? Which part? Right. Okay, that minus 2,000 part, I got it from here. This one. I'll show you. Right. This one here. So over here, cash and cash equivalent. Now in 2004, it's 10,000. No? So 2004 is start at the beginning. So that 10,000, I marked it here. This minus 2000 from where did I find? Cash and cash equivalent is nil in 2005. So that means we don't have cash in hand. But normally, if it's nil, check and see for the same time, is there something called an overdraft? You have to do that always. If cash is there, no problem. If they say cash is nil, that means there is an overdraft. So what I did, I went and checked my overdraft. And here in 2005, the overdraft is 2000. So normally, overdraft means it's negative cash. That's why over here, I took that and copied it as now 2005 is closing. No? So cash and cash equivalent at the end is minus 2000. So remember for FA, as cash and cash equivalent, we can only get two things. If cash is in current asset, that means it's a positive number. If they say it's nil, that means there is an overdraft. So check for the overdraft in your paper and copy, but make sure when you copy it as negative. Can little bit check and see, was I able to clear the doubt what you have, or is it something else? Got it? No? Okay. Okay. So guys, then in that case, we will quickly guys go for a short break. Let's quickly pray and come back. So we can have, let's say, a 20-minute. We'll do another one cash flow statement and see whether everything is okay. If so, we'll move to a new topic. Right. So guys, have a 20-minute break and come back. Okay, right. So guys, then let's resume the session. Just give me 2 minutes time for me to just set up the structure. And once that is set up, I'll start explaining. Okay. Okay, right. So guys, then what we will do, let's now resume the session after the break. Right, so guys, let's do another one full cash flow statement and see whether we are okay with the area. If so, guys, what we will do, I'll move to another one part. So let me guys quickly then clear out the screen and let me show you the question once again and let's start then. Okay. Now guys, over here, this is an updated version of the question that you will be getting in the exam. So once again, guys, the question's name is Cracker and Corporation. Maybe after the class, I can share the question as well as my worksheet. Okay, now guys, over here, so like earlier, they have given you the format completely. Here you can see now guys, depreciation, investment income, inventory, every single thing has been provided to you. And that exact same thing, I have copied it on my screen here, right? And now guys, when compared to the last question, there are some new things. Here, can you see? Right. Disposal proceeds, item number 1. So they want you to show how did you get this answer. Okay. Now disposal proceed, you can do the disposal account, but then you have to show the examiner how you got that answer. Item number 1, select how you got the answer, then it will get updated here. Proceeds of share issue. He wants you to show how did you, now let's say guys, answer is 10,000 value. He wants you to show how did you get 10,000. He wants you to mark it and show over here. So like this guys, extra things also you can get in your exam just like this. Okay. So if the answer is 800, he wants you to show how did you get 800, show the working. So like that guys, you have to select that as well. So it's pretty much the same thing, but just that, we have extra 2 adjustments over here. Right. Okay. Now, guys, again, one more time, let's go to the additional information. Always start the question from additional information. Then you will know what account to draw and what not to draw. Right. Now, guys, look at this one, will you? Question number 2, additional information. During the year, Cracker disposed. Guys, dispose means we have to prepare what account? Disposal account. That's why here on the screen, you can see a disposal account. Right, next one. So guys, remember, if you do open a disposal account, please open a property, plant and equipment account also. So always guys, remember, in our exam, PPE will be at what value? It will always be at carrying value, one single line. Okay, it will always be at carrying value. Right, then guys, next one. Cracker Corporation estimated income tax. Because the next adjustment is about income tax, I have drawn the income tax account. Now guys, when compared to my earlier question, under financing activity, can you see there is only two things, no dividends. Now earlier question, I prepared disposal account, PPE account, income tax account. Also I prepared what account? Retained earnings account. But guys, in our current question, can you see over here, that's not provided. Can you see? The dividends is not there. Because dividends is not there, I am not going to open my retained earnings account. So only 3 accounts or workings I need to prepare for my current question. Are you guys okay with that part? First one says disposal. So along with that one, PPE. Second paragraph spoke about what? Income tax. So therefore, guys, I have drawn my income tax account also. Right. Can you guys little bit check and see, are you clear with how I picked up my T accounts? Any doubts, guys, that you have? Just let me know how I picked up my workings or my T account. Right. So guys, all are comfortable with that part. Now, if you have a doubt, don't hesitate. Send a message to the chat box. I will clarify it for you. Okay. Now, guys, then let's start the question. Right. Now, guys, it says over here, during the year, Cracker disposed some items. The carrying amount is 800,000. Last time, they didn't tell us the carrying value. We had to find it out. But this time they are telling carrying amount of the disposal is 800,000. Okay. Now, guys, what's the double entry for that one? Remember, when you sell an asset, you should remove that. So when you remove, what will happen? PPE account will become credit, disposal 800,000, and disposal account will become debit 800,000. That's a double entry. So guys, when you dispose and if the carrying value is available, step 1, remove it from the PPE account. So PPE will become credit. And because you're disposing, put that inside the disposal account will become debit. This is how you should mark removal of carrying value. PPE account credit, disposal account debit. That's it. Okay, right. Then guys, next one, let's check and see what they have given in the paper. Depreciation is 500,000. Now guys, can you remember I said you last question, depreciation, we have to always mark it in which account? If it's at carrying value, we have to always mark it inside the PPE account. Always on what side? Depreciation. Depreciation, guys, will always be credit. Exactly. So therefore, guys, go and mark this on the credit side. Depreciation. Okay, copy this one, guys, over here. How much? 500,000. It's 500,000, right? Yeah, 500,000. Done. Okay. Now, guys, once you copy the number to the T account, always check and see, can we mark it on the cash flow statement? Okay, guys, disposal account, what we copy in the cash flow statement is 2 things. The loss or gain on disposal or the cash received. So this is the carrying value. No carrying value, guys, normally we don't mark it inside the cash flow statement. So no need to worry about this. Depreciation, yes, guys, depreciation, we normally mark it inside adjustments. Here, can you see depreciation? They have typed and given, so shall we mark that one? Okay, so take 500,000, put it here. Okay, now guys, think depreciation is what? Expense. Expenses inside adjustments, what do we normally do? We add. We should do the opposite. So therefore, guys, let me remove the word from here, subtract. So this is how, guys, we do that adjustment. I'll give you guys time to clarify your doubts. Okay, next one, guys, income tax. Guys, listen. Income tax is 2.9 million. No, don't worry about this at all. This 2.9 million will be sorted when I copy this from the SOFP. So just like in the last question, my income tax, I am not taking it from the adjustment because this 2.9 million, this 2.9 million. It will be sorted out when you copy the carry it down. So that is then already taken care of. So therefore, guys, this paper also, I am not taking my income tax adjustment. All good, right? Can you guys little bit check and see with adjustment number 1 and adjustment number 2, how I took this and where I took it? Are you guys okay with that part? Little bit check and let me know, guys, for any clarification that you would like to make. Okay. All good, guys? No problem? Let's move on to the next part then. Okay. So guys, once you're done with the adjustments, we can, start taking all our answers, guys, one by one. Okay, right. So let's start with this one over here. Okay, so guys, once again, revenue and cost of sale. Guys, okay, revenue, cost of sale, don't take. Why not to take? Because it's adjusted inside the working capital changes. So no need to take that. Gross profit, no need. If sales and cost of sales we don't take, we don't need to take gross profit also. Okay, then guys, next one, distribution and administration expense. Guys, those two, check your adjustments. If they have not taken, don't worry about those two as well. Right, next one, guys, we have profit on disposal. Guys, remember, profit on disposal is there, no? Profit on disposal is a non-cash item. Okay, profit on disposal is a non-cash item. So that we should take it in adjustments. Here, can you see profit on disposal there? Guys, listen. I'll tell you one more thing. Whatever that's bit on top of this, nice. If you're a student who has difficulties, you don't understand what comes inside adjustments. Guys, listen to this part, will you? Top of profit before tax, there are topics, no? Okay. From that, revenue, cost of sale, gross profit will never ever come inside adjustments. That's because they are sorted inside the working capital changes. Whatever that's in between that, you check and see in your exam, are they marking it inside adjustments? If it's there, you type it. If it's not there, ignore about it. Got it? Now see, sales and cost of sale, I did not take. Why? Working capital changes. Gross profit also no need. After that, anything above profit before tax, everything you have to check and see whether they have shown it in adjustments. If they have shown it, copy it. If not, you ignore. Simple as that. Because guys, they have made your work easier. Okay. In your exam, they will tell you exactly what's going to come. So you just have to go through the format and see whether it's there or not there. Right. So distribution administration expense is not inside adjustments. So I'm not going to worry about it. Profit on disposal here, guys, can you see the examiner has shown me over there, see, gain or loss on disposal. So here it says profit, no, guys. So profit means, let's copy that here, 300. Okay, right. And guys, remember one thing, profit is what, guys? Profit is income. Because it is an income, we should put subtract, do the opposite. Guys, remember, inside adjustments, we always do the opposite. Incomes we are normally adding, no, but in this case it has to be negative, subtract. And remember one more thing, because we are doing a disposal account, you have to show this here also. Okay, this 300 you marked it in cash flow statement, that's correct. But the same thing, guys, you have to also mark it and show inside the disposal account because you are preparing. Okay, this profit, no, profit on disposal, guys, normally comes on debit side. 300. Okay, normally comes on the debit side. Okay. Right. So guys, I'll write it here, profit on disposal. Guys, earlier paper loss came on this side, no? So profit has to come on this side without a doubt. Okay. And also, guys, one more thing here. Can you see they have given you two words? This is profit, no? Profit means, guys, delete the word loss. It is a gain on sale of plant. Okay, then guys, next one, investment income, check adjustments. Here, can you see guys, investment income is provided. Can you see? So you have to mark it here. Okay, investment income is how much? 300. So take that, copy it here. And guys, remember, this is what? Income. Income means do the opposite. So subtract. Done. Okay, now guys, remember, investment income is part of investing activity. Now, if someone is thinking, okay, why investment income? Why should we mark it here? Investment income means anyway we get money, no? So why should we write it here? Guys, listen. Investment income, you get money through. So why are we removing that from here? That's because investment income, guys, should not come inside operating activity. Investment income, we have to show it inside investing activity. That's why we are removing from there. Okay. Same like interest. Guys, can you remember in the earlier question, interest, I removed from one place and I copied it to the other place. Same concept. Investment income, we are removing from here because we get money through. But we are removing it from operating activity because investment income is not an operating activity. It's part of investing activity. So we have to show it there. That's the reason why we remove from here, subtract, and we go and write it here, investment income 300. Here, because money is coming in, I'm going to show it as add. Guys, I said, after this, from inventory onwards, your focus has to be money coming in, no going out. Income means money comes in, no. That's why I'm marking and showing guys over there as add. Got it? Right, next one, guys, interest. See, under adjustments, we have interest. So first you write it here. How much is the interest? 2001. Okay. Guys, I think I have made a small mistake. Investment income is 320. So I'll amend my mistake here, 320. Here also, guys, 320. Okay, guys, next one, interest 2150. Here, can you see interest 2150? Now think, add or subtract. Interest is expense. Expense means add. Done. And guys, interest, can you see it's again coming in another one place? So copy it again over here also, 2150. But this is interest what? Paid. Paid means money goes out. So therefore, guys, it has to be subtract cash outflow. Got it? Okay, next part, guys. Profit before tax. So profit before tax and after tax here. But problem is there. No, always, guys, remember we start with before tax. So I'll remove the word after tax. And then, guys, let me write here profit before tax is going to be 11,650. Next one, income tax expense. Guys, income tax expense. Now listen, guys. Now we are done with adjustments. No. What is top of this only? You have to worry about adjustments. What is after this? You don't have to worry. Okay. Normally, guys, adjustments is what is top of this and between gross profit, not what is after. Okay. Income tax expense, because we are having an income tax account, we should mark this here and show. So normally, guys, from the income statement, income tax, we should write it here. What is the answer for that one? 2,900. So guys, I'll write it here and show. Okay. So income tax is expense, no guys. So expense means what will happen? Income statement debit, tax account will become credit over here. That's how the income tax will work. Okay. It's an expense. Therefore, income statement debit, tax account will become credit. Okay. And then, guys, next one we have profit for the year. Guys, earlier, previous question, profit for the year I took. Why? Because I was preparing what account? Retained earning account. This paper, are we doing retained earning account? No. So therefore, profit for the year is not needed. Last question, guys, I had to find my dividend. Therefore, I drew the retained earning account. Therefore, I had to take my profit for the year. But this question, because there is no dividends, there is no retained earning. No retained earning means no need to open what account? Profit, no need to take profit for the year as an answer. Right. Guys, with what I have done with my income statement, I took some numbers here. Again, I marked it down also. Can you guys little bit check and see? Do you understand why we do that one? Okay. Why we remove from here and why we go and mark it to another one place? Little bit check and see, guys. Are you comfortable with that part so far? Because I'll be now going to the SOFP. So I want to check, guys, whether you all are comfortable with these areas. Okay, right. So guys, seems no doubts being asked. So I'll move on, guys, to the next part. Okay. Then guys, over here, property, plant and equipment. And also guys, I forgot to mention, normally if PPE is given in one line, it's always at carrying value. Now, no one had asked me this question, but I'm still explaining. Now, in the exam, if PPE is given in one line, that means PPE at carrying value. Is that clear, guys? PPE at carrying value. So can you guys remember in our paper, we are doing the PPE account? So because we are doing the PPE account, I need this answer. So I'll go for a one-page view now. Okay. Right. So guys, over here, property, plant and equipment, this is 2000, this is 2001. Okay, 2000 and 2001. So 2000 guys will become brought forward, 2001 will become carried down. So PPE is what? Asset. So therefore guys, let's start marking properly without a mistake. Brought forward guys over here, 70,500. Carried down guys over here, 73,000. Okay, right. Then guys, next one, let's go with asset. Guys, when you come to inventory, what you should know, it's what? Working capital changes. So once and for all, guys, do the working capital change and finish it off. Then you don't have to come back for it again. Okay, so let's start then. How to do, guys, working capital changes? First, compare here to here and here to here. Guys, always when you compare, please go brought forward to carry it down. Don't go the other way around. Then it will become wrong. Okay. So therefore, guys, you have to always go, guys, brought forward to carry it down. Right. Okay. Then, guys, can you then go brought forward to carry it down? Start comparing here to here, guys. What's the difference? There's a difference of 2000. Increasing or decreasing? What do you think? 25 became 27. So it has increased. Inventory increasing means what happens, guys? Money goes out. So because money goes out, we are going to keep the word subtract. Okay. Right. Next one, guys. Trade receivable. Okay. Compare value 33 to 37,500. Compare and see what's the difference. 33 to 37. What's the difference, guys? 4,500. Reduced or increased? Here to here, it has increased. Again, when the current asset is increasing, money has gone out. So always, guys, remember current asset increase, money goes out, current asset reduce, money comes in. Okay, cash. Guys, cash and equivalent means what? The last part. Okay, now see, 1,250 is 2,000. 2,000 means start. Then I'll write it here, cash and cash equivalents at the start, 1,250. Because it's cash, it's positive. Therefore, guys, add. Now, can you guys remember last time it was nil? Nil means you have to search for overdraft. If it's not nil, no worries. Okay, now guys, over here, it's not nil, no, 4,215, 2001. Then that's at the end. 4,250 at the end, like this, you mark it and keep. Okay, right. Then guys, let's go down for the other parts then of the paper. Right, over here, next page. Right, now guys, on the next page, we have then equity share. So guys, can you remember I said you last time when you go to share, compare, but when you're comparing, are you going to do it alone? No, don't do it alone. Do it together with the share premium. You understand? Equity share, when you compare, guys, brought forward to carry it down, please compare it with the share premium always. Now, guys, see, here to here, what's the answer? Here to here, 1000. Here to here, nil to this, nil means 0. Here to here, guys, what's the answer? 610. That means it has increased. Increasing means what's the reason? If share capital increase, guys, it's because of issuing share. This one, guys, proceeds of share issue. So therefore, we have the answer. Small problem. Guys, we can't write the answer inside this. Can you see? It says item number 2. We can't write the answer. We have to select. Okay, now let's see then what is an item number 2. Then let's check and see. Item number 2. What is that? Okay. So guys, here see. Item number 2. Proceeds of the share issue, select the correct calculation. So guys, what was the answer we got? We got 1610. How 1610, guys? Here, if you didn't understand, 10,000 to 11,000, 1,000, 0 to 610, 610. So together, 1610. Is that clear? 1610. Right. Now they are asking you how are you going to get that answer? Select it. 11,000 minus 10,000 can't be, no, guys. 11,000 minus 10,000, 1,000 plus 610. This is the correct option. So in your exam, you will tick this box or you will select this box. So when you select this box, what will happen? Your answer will get updated in your exam inside this. Got it? Now it says item number 2, so you can't type it. So go to item number 2 and select how to get that answer. 1610. So I got it by using the second option. So when you select that in your exam, it will get updated inside this. It will become 1610. Okay, now guys, don't forget your issuing share, money comes in. So when money comes in, add. So I will keep it over here. Item number 2, answer is option number 2. Are you guys clear with how I got this answer? Okay, so this is what you should do in your exam. Little bit check and see, guys, are you comfortable with how I did that? I got 1610. I selected a combination which will give me that answer, went and copied it over there. All good, guys? Little bit check and see. Okay. Right. So guys, seems you all are guys okay with that part. So nothing to worry then. Right. Let's move on. Retained earning. Guys, this time we are not opening a retained earning account. So you don't have to worry about retained earning. Right. Non-current liability, debenture. Guys, debenture is a loan. Just like a bank loan. Don't worry much. Okay. Debenture is a loan. Okay. Let's start. Debenture here to here. Compare and see, guys, what's the difference? 20 to 23. What happened? It has increased. So loans are increasing means what's the reason? We are settling or we are borrowing? Loans are increasing means we are borrowing. We are taking a loan. No, guys. So when you take a loan, it's a financing activity. So go to this financing activity. See, loan raised. How much loan have we raised? 3,500 is the answer. So therefore, guys, that has to be add. The reason, guys, why that is add is because simple. Because when you take a loan, money comes in. So add. Okay. Okay. Then, guys, we're down to the last part. Trade payable. Okay, guys. Trade payable is part of what? Working capital changes. I didn't do that. No. Trade payable. Okay. Start comparing, guys. Here to here. What's the difference? 31 to 29. Check and see, guys, from here to here. What's the difference that we are getting? Let's calculate. Okay. 31,900 minus 29,450. There's a difference of 2,450. Now, guys, it has gone down. Can you see 31 became 29 means it has reduced. So when it reduces, that means we have settled them. So guys, when you settle them, what will happen? Money goes out. So therefore, guys, it has to be subtract. Okay. When you settle your trade payable, you're paying them, no, guys. So cash outflow. So that's why we are writing it as subtract. Income tax. Guys, income tax means where I put it to my account. Here is this account, income tax. Right. So therefore, guys, brought forward over here. If you're thinking, why is the brought forward coming on this side? Okay. The brought forward is coming on this side, guys, because can you see it's a liability. Liability means brought forward is right side or credit side. Okay. So let me guys mark it over here. 2,310. And over here, guys, income tax will be 2,900. Okay, so guys, then with that one, now we have done the question and finished. Now it's just about us closing the accounts. Okay, right. Now, guys, then let's do that and finish it off the question quickly. Okay, let's start. Right. Now, guys, first let's close the disposal account. 800 plus 300, guys, answer is 1,100. 1,100. Here also, guys, 1,100. That means this 1,100 is none other than cash. Okay, so guys, what do we mean by cash? Cash means we are talking about what? The proceeds from selling the asset. Normally, guys, when you sell, there are now traditionally, guys, there are 4 steps. No, when you dispose an asset, there are 4 things. Remove the cost, remove the provision. Removing the cost and provision, only this part, removing the carrying value. What is step number 3? Collect the money, that only this part, cash. And then 4, profit on disposal or loss on disposal. In our case, it's a profit. Okay, so this is how, guys, we do what you can say our disposal account. Okay, now, guys, can you look at this part? Cash. Disposal of an asset is part of investing activity. When you sell an asset, it's an investing activity, but you can't write the answer because it says item number 1. Okay. So therefore, guys, item number 1 means you should select from here. See, item number 1, 1,100. How did you get the answer? Select it. So guys, over here, how did we get 1,100? 800 plus 300. 800 plus 300. Second one is the correct option once again. So in papers, when they tell like this item number 1, guys, you have to select your answer from this part. Then once you select it, it will get updated over here. So how did we get 1,100? 800 plus 300. So this is the correct option. And when you select this, it will get updated. Guys, disposal means selling. No, so money comes in. So when money comes in, remove the word subtract. Okay. Right. Now, guys, let's close this account also, guys, faster. 73,800 plus 500 will give me 74,300. Put this answer, guys, over here. 74,300. Okay. Now, guys, can you start deducting? Right. 74,300 minus 70,500. Okay. So, guys, over here, the answer is going to be, right, 3,800. So, guys, like I said earlier, if the answer comes on this side, what do we call this? Purchase of PPE. Okay, normally, guys, in the exam, they make you do the PPE account, okay, for you to find this cash purchase of PPE. So, therefore, guys, over here, cash purchase of PPE should come here. Okay, so once you found this answer, it's purchase of PPE. That's an investing activity. Cash purchase of property, plant and equipment. Let's write the answer, guys, over here. 3,800. And because you're buying, or wait, is there a mistake, guys? Which one? This 800. Okay, wait, I'll come back to that one. Okay, so guys, over here, you mark it here. Because it's purchase, money goes out. Okay, so therefore, guys, I'll delete the word add. Right, okay, so there's a doubt over here. Let me go through that one more time. Aren't we adding the 800? Okay. That 800, you're referring to adding it where? If you want, you can even unmute and ask. There's no problem at all. Okay. Yeah. Yeah. In arriving at this answer, we are adding that also. Wait, guys, did I make a mistake by adding that one? Wait, let's see. 73,000 plus 500 plus 800. Yeah. When you're arriving at 74,300, we have to add the 800 also. Okay, so it's like this. 800 plus 500, 1,300, 1,300 plus 73,000, you will get 74,300. So when I'm adding that 74,300, I had considered the 800 also. 800 plus 500 plus the 73,000, I put it here. Then 74,300 minus this only, I got this answer as 3,800. Are you okay with that part? Right. No problem at all. Okay, right. Right, so guys, then this 3,800, I have taken it here. So that part is done. Okay, guys, income tax. Let's close this account also, guys, faster. 2,310 plus 2,900, guys, answer will be 5,210. Yeah, is that correct? Yes. Then here also, guys, 5,210. When you subtract, guys, answer is 2,310. That's the cash. So, guys, remember this cash answer. We should go and, guys, mark it over here. Okay. The cash answer is tax paid. No, tax paid, guys, goes here. So, guys, when you pay taxes, money goes out. So, I'll delete the word add. There you go. Okay. Right. Now, guys, last part. Guys, again, same story. You don't need to total it up. No need the operating activity, no need the investing activity, no need the financing activity. You don't have to total, but remember, you should get this answer. Okay. No need to total the activities, but still we should arrive at this answer. So guys, how to arrive at this answer? Go backwards. Okay. So what do you mean go backwards? Take 4,250. This 1,250 is plus, no, when you go other side, guys, it will become minus. So minus 1,250. So therefore, guys, the answer will become none other than 3,000. So 3,000 positive, no. So therefore, guys, I have left the word increase. Actually, there were two words increase, decrease, and only kept increase. So always, guys, you have to go backwards and only you have to find the answer. For anyone who doesn't know, it's like this. Increase or decrease in cash plus the cash at the start is equal to the cash at the end. This is the normal equation. Okay. So therefore, guys, cash at the end is 4,250. Cash at the start is 1,250. So examiner wants you to find this part always. So you just, from this last answer, go backwards on this answer and you will be able to get it. And guys, because it's positive, I have labeled it as increase, right? So this is how, guys, the cash flow statement is done for section B in your paper. So we can be happy because, guys, we have done 2 full questions. That will come for the exam. 2 15 markers we have discussed, right? So still there is little bit of time left. So we can, guys, discuss on some MCQs, section A related questions. And next week, I will, guys, share some materials with you. Go through them, study the shortcuts, because next week we are discussing consolidation. Okay. Right. So, guys, these 2 questions are done. I'll share the question as well as my worksheet in the group. So if you have, guys, any doubts on this question, how I finished it off, just ask me, right? I'll be happy to explain it. If not, guys, what we can do is we can start doing some MCQs from cash flow statements. So done like a proper coverage. Section A is also done. Section B is also done. Right. So these are, guys, some of the MCQs that we get in the exam. Let me load that one. Okay. So, guys, these are some of the MCQs that we have. You can either send me the answers on the chat box, or, guys, maybe you can answer it to yourself. right? Some of the answers that we have guys over here. So guys, I want you to first try to find the answers for question number 1 and 2. Okay, so just try to do the highlighted two things. And if it's okay, we'll move on to the rest. Or guys, if you want, you can also answer like this. Okay, question number 1, question number 2, question number 3. Okay. Can you guys then first try to answer for me these three, 1, 2, and 3. Try to find the answers, guys, for these. And I'll give you guys around, roughly around, let's say 5 minutes time. Okay, and then I'll discuss it. So guys, when it comes to MCQs, you can get questions on both direct as well as the indirect method. Okay, there is no specifics there. But when it comes to guys, paper 2, right? Paper 2 is where you will only be tested on the indirect method, section B. Whereas when you guys take section A, you can get questions from both part. Now, when you go down over here, it's a direct method question. So you can get questions on both areas over there. Only section B will come from indirect. Okay, so anyway, guys, you can continue answering and then we'll discuss. Okay, so guys, I'll discuss the question number 1 first. Okay, and so they're asking, which of the following items could appear in the cash flow? A bonus. So guys, remember in cash flow, we usually mark the money that comes in and goes out, all the cash transaction. A bonus issue. Now guys, bonus issue means what? Giving shares free of charge. So guys, when you give shares free of charge, we do not mark it inside the cash flow statement at all. Okay. Bonus issues means giving shares free. So when you give shares free, we don't get money, no guys. So we don't mark it in the cash flow statement. We don't mark it in the adjustments also, right? Because bonus issue doesn't come in the income statement, no. It comes inside the SOCE. So it doesn't come in adjustments also. So therefore, guys, wrong. Right issue, yes. Why? What is right issue? Right issue is, guys, where you give shares at discounted price. 5 rupees share, you're giving for 3 rupees. So when you do give like that, guys, money does come. So therefore, we do consider it. Revaluation of non-current assets. No, I said, guys, revaluation is a non-cash item. Money doesn't generate. So therefore, we don't mark it on the cash flow statement. Dividends paid, yes. Financing activity minus. So therefore, guys, 2 and 4. So therefore, answer has to be option C. This has to be the correct answer. And also, guys, when I'm doing the MCQs, if you have a doubt, you can ask. Okay, you don't have to worry. You can ask. I can explain. No issue at all. All right, guys. Then can you then do the second one, guys, over there? If you got stuck with the first one, now you can try the second one and see. Okay. Second one, no, right. Let me check on that one, Zaid. Okay. All right, guys. So let's check then second one. Okay, now guys, they are telling a draft statement of cash flow has contains the following: profit before tax, depreciation they have added. Which of the following correction? Okay, so guys, bottom line is this. They have done a calculation, but we are not sure. I mean, there are some mistakes. Okay. They have done a calculation, but there are some mistakes. So now they are asking us to correct it. Right. Profit before tax, that is correct. Normally, guys, we start with that and it's positive. Depreciation, they have added. That's also correct. Because, guys, remember, depreciation comes under adjustments. No? Under adjustments, we always do the opposite. Depreciation is an expense. So in adjustments, we normally do the opposite, meaning expenses are normally deducted, no? But here in that case, we have to add. So what they have done there is correct. Increase in inventory is minus. That's also correct because, guys, inventory increasing means what's the meaning? We have bought. If you buy, money goes out. So therefore, that's correct. Decrease in receivable is minus. That is wrong. Okay. That is because, guys, when trade receivable is reducing, that's positive. Why do we say it's positive? Guys, listen. When the trade receivables are reducing, that means they are settling us. So if they settle for us, money comes in, cash comes in. So therefore, guys, it's positive and not negative. Increase in payable. Increase in payable, guys. If the supply is increasing, that means we have borrowed money from him. So when you borrow money from someone, cash comes in, no, then it's positive, not negative. So therefore, guys, corrections must be made to these two. So over here, it has to be decrease in receivable should be added. Increase in payable should be added 3 and 4. So therefore, guys, D should be the correct answer. Okay. Which are the following corrections? So they are asking what should be corrected. So these are the two areas, guys, that has to be corrected from the cash flow statement. Okay. Right. Now, guys, then can you then try and see, guys, MCQ number 3 then on your own? And also, guys, on MCQ number 2, if you have any difficulties, anything that you didn't understand, please ask me. I will explain. Right. Then, guys, then can you try then MCQ number 3 as well as, guys, over here, MCQ number 4. So, guys, in today's class, direct method means, guys, I didn't do a recap on that one because I was mostly focused on section B. Right. So, for those who don't know, guys, normally when it comes to direct method, investing activity and financing activity is still the same. Now, I spoke about investing and financing. No, that will still be the same. What will change is this one. But what will change is the direct method. Now, normally, guys, when it comes to the indirect method, we have what and what? Profit before tax, adjustments, working capital changes. Whereas for those who don't know, normally guys in the direct method, that is not there. Normally direct method, when it comes to guys operating activity, what we have is this, okay? We have number one, cash sales. So if you can't sell for cash, you sell on credit. So if you sell on credit, guys, it will become cash collected from customers. Then we have cash purchases. Then we have, if you can't sell for cash, if you can't buy for cash, you buy it on credit. So when you buy on credit, we call it cash paid to suppliers. Right. And then guys, we also have something called operating expenses. After that, like normal guys, we have the interest paid, as well as guys, we also have the income taxes paid. Okay. So these are the normal things guys that we have in the cash flow statement for the operating activity, right? So direct method, we have profit before tax, adjustments, working capital changes, interest and income tax. Whereas when it comes to the direct method, this is the maximum that we can get. Cash sale, cash purchase, cash collected from customers, cash paid to suppliers, operating expense, and these two. So anyone guys who didn't know about the direct method, now that I have put the format on the screen, now guys, can you try and see whether you're able to answer this question guys over here, the fourth one, whether you're able to answer? Okay, right. So guys, let's look at third one. A statement of cash flow prepared in accordance with the indirect method. Which of the following only contains the list of items that is added to profit before tax? So they are only asking about the adding part. Decrease in inventory. That's correct, no guys? Normally when the inventory is reducing, money comes in, so we add. Depreciation. That's also correct, no guys? Normally here, can you see? Depreciation, we have to add. Profit on sale. This is the killer. Profit is an income. We don't add. We do the opposite. We subtract. So therefore, guys, this is the one that makes the option wrong. It's minus. Okay, guys, next one. Again, guys, see, increasing payable. Increasing payable means what, guys? Increasing payable means supply increasing. That means we are borrowing money. That's plus. Decrease in receivable, correct. Why? Decrease in receivable means customer is giving money. That's why he is reducing. So cash comes in. Again, guys, this is the killer here. Profit. Profit is minus. Right now, guys, over here. Loss on sale of non-current asset. That's correct. Why? Loss, expense. Expense we add. No, this is okay. Depreciation. That was also positive. Increase in receivable. This is the wrong one. Because guys, if customers are increasing, then they are borrowing money from us. No, so when they take from us, cash goes out. So this is the wrong answer. It's a minus one. So therefore, guys, obviously answer has to be the last one. Last one should be the correct option. Okay, so if you're having a doubt, guys, just let me know. Okay, then guys, next one. Which three of the following items would you expect to see included within the operating activity of a direct method? See, direct method. I have given you the operating activity. No, so guys, payments made to suppliers, that only this one. So therefore, that's yes. Increase or decrease in receivable? No, guys. That is from the which method? Indirect method. Indirect method only has increasing in receivable or reducing in receivable. Receipts from customers. Yes, here guys, cash collected from customers. These also correct. Increase or decrease in inventories, guys, which method? Indirect. Increase or decrease in payable is which method? That also indirect. Last one, finance cost. Finance cost is what we call interest. Normally, guys, in ACCA exam, interest, they always call it as finance cost. Right? So this is going to be the answer for MCQ number 4. Okay. Right. Little bit, guys, can you go through then this question and also see, guys, whether things are okay with you? Any doubts that you have? Okay, right. So guys, then let's check and see over here. Is there anything else? No, here guys is just a small note only what we have. Okay. Yeah. So guys, I think that's pretty much it, guys, for today's session. So guys, then we have discussed some MCQs as well as we have done 2 section B questions on cash flow statement. So now, guys, after the class, maybe I think tomorrow morning, I'll share the documents which I had used in today's class. And I will share some materials which will be needed for next Monday class. So then we can prepare ourselves more. So guys, remember next week we are looking at consolidation. I will share my short notes with you. Start going through them. So then when I do the class, it will be easier for you. All okay, right? So guys, then with that, then I'll wrap up then today's session. Cash flow is done. Next week, we are doing consolidation. And if there is any other target areas that you want to like product check and see, you can let me know. We'll see how it can fit in my schedule. Because the last 2 Mondays, we will do section A MCQ. So it will be like an overall revision. Okay. Right. Okay. So guys, and with that, then I'll then conclude today's session, guys. Take care and stay safe. I'll see you all again then on next Monday at 6 p.m. Okay. If there's anything that you want to clarify, guys, you can let me know now even. If not, guys, we are done with today's session. Okay, right. So guys, any doubts, you can even send it to the group. No problem at all. Okay, wait. Okay. Okay, right. All right, guys, then welcome then. I'll see you all then again next Monday at the same time. Okay.